Good afternoon. This is Jonathan Satovsky of Satovsky Asset Management. December 18th, 2017 with a video blog update. And today I wanted to celebrate, with the holidays upon us, the fact that this week we've hit 70 records in the financial markets this year. It's the equivalent of climbing a wall of worry, as the headline news continue to cause people to be apprehensive about saving and investing for their future. The markets have continued to risen. In fact, barring any material change in the last week and a half, this will go down as the first year in history that we have not had a single monthly decline in global markets. So this sense of calm is absolutely astounding and worth reflecting upon with gratitude during the course of 2017. And looking ahead, I should be mindful of the fact that technological advances and change have provided, in my opinion, this degree of calm and abundance around the world. And in that regard, one thing that we are thoughtful about is cybersecurity and protecting people's data and protecting people's information. So in the past, we have aggregated people's financial accounts at 401ks and stock options and a lot of other outside assets that we aren't able to manage directly. And by the end of the year, we're going to purge all of the usernames and passwords so that the clients can directly, if they want to, upload that data on their own side through a new technology provider we're using called Quovo. So you may get emails if you are one of those clients impacted. But transitioning to the headline news of the day, today the House of Representatives passed a major tax reform bill, which is going to the Senate to vote on this evening and expected to be signed into law by the president by the end of the year. This is a very controversial piece of legislation. It's projected to be $1.5 trillion line item. And I, for one, am very torn about this because as I read the data and I do a little bit of digging and research, it seems to me that there are a lot of unintended consequences that may come upon us as a byproduct of this. Infrastructure, education spending, inequality, deficits. I mean, there's a host of things that may be impacted, and particularly states in New York and New Jersey and Connecticut and California. This is a particularly painful impact for a lot of people when everyone's being promoted as it's going to be a massive tax cut. Here's the data from NPR showing the impact in 2018. And here's the longer term impact going out to 2027. So certainly it is absolutely a policy that is going to benefit people with over $1 million of income. And those with less are, over a long period of time, I believe may be adversely impacted. But we have to deal with the tax law as it is. If it ends up going too far, there may be amendments and adjustments that you can expect in the next 3-4 years when new Congress or new president takes office in the future, if it ends up being too extreme. But knowing that it will impact everyone, I would encourage everyone to speak to their accountants and consider prepaying property taxes for 2018 and taking advantage of any charitable deductions and front loading any things that they can to minimize their tax obligation for this year. So with that, I give a great debt of gratitude and thanks to all of our loyal, patient, disciplined investors who have been able to be calm and inactive and benefiting from the wonderful abundance in financial markets that we've had for 2017, and wishing everyone prosperity into 2018 and beyond. Have a restful and enjoyable holiday with your families. Bye-bye.